Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is April 20 and we're starting from the euro-dollar pair with Jakub Novak as usual. First, let's have a look in 5-minute chart for analyzing yesterday's transactions. Euro tested 1.0945 when the MACD line had just started to climb above zero, which was a good reason to buy. As a result, the quote rose by 35 pips. Meanwhile, sales on the rebound from 1.0974 brought around 20 pips of profit. CPI in the euro area was the same as expected. However, core inflation rose despite a decline in the overall indicator, indicating that problems persist for the European Central Bank. That is why euro rose, as interest rates may continue to increase. Ahead are key reports on the Eurozone, namely the Producer Price Index from Germany and the minutes of the meeting from the ECB. Hawkish tone and hints of further rate hikes will fuel demand for euro, but these may be offset by strong data on US jobless claims and volume of home sales in the secondary market. The Philadelphia Fed Manufacturing Index and speeches by FOMC members Christopher Waller and Michelle Bowman may also help dollar compensate for losses, as recently policy markets continue to insist on raising rates. For long positions, buy euro when the quote reached 1.0980, and then take profit at the price of 1.1020. Growth will be seen if the ECB retains its hawkish stance on monetary policy. However, before buying, traders should make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought at 1.0950, but the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.0980 and 1.1020. For short positions, sell euro when the quote reaches 1.0950, and then take profit at the price of 1.0906. Pressure may return if there is no bullish activity at the weekly highs. However, make sure that before selling the MACD line is below zero or is starting to move down from it. Euro can also be sold at 1.0980, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0950 and 1.0906. The next stage of our review is the next major pound-dollar pair. Sebastian Siligo presents. The GBP USD pair has made a new swing high, seen at 1.2545, and it's currently developing the corrective cycle. This cycle might be in form of the ABC pattern, where wave B might be a rising wedge or a triangle pattern. The intraday technical support is seen at the level of 1.2343, and the intraday technical resistance is seen at the price of 1.2473. The momentum on H4 timeframe chart is weak and negative, so the corrective cycle might be continued lower than the potential which pattern is done. When the overall corrective cycle is completed, the next target for bulls is seen at 61% Fibonacci retracement, located at the level of 1.2778. The key short-term technical support is seen at 1.2269. We've got a potential bullish movement on USD CAD. This trading plan is presented by Dean Lau. The USD CAD chart is exhibiting a strong bullish momentum that could potentially continue to push price higher. This is supported by the fact that the price is trading above a major descending trend line, which is a bullish signal. In the event that the momentum persists, the price may break through the first resistance level and extend its bullish above. The first support level of 1.3420 is a significant overlap support level that coincides with a 23% Fibonacci retracement. This level has added significance due to the convergence of factors. Additionally, the second support level at 1.3304 is a multi-swing low that aligns with the 61% Fibonacci projection. As for resistance levels, the first resistance level of 1.3520 is a pullback resistance that is reinforced by 78 Fibonacci retracement level. The second resistance level of 1.3649 is also a pullback resistance that converges with a 61% Fibonacci retracement level. We've got a trading plan for USD CHF currency pair. Petr Jakimovic describes. USD CHF has been trading downside this morning, and we found potential for the further downside movement due to the breakout of the triangle pattern in the background and the downside cycle in the background. Petr sees potential for the further downside movement. Downside objective is set at the price of 0.8875. MACD oscillator is showing downside momentum, which is sign for the further downside movement. Key resistance zone is set at the price of 0.8980. And finally, here's Dimitrios Tsipras with the USD GPY pair focused. Let's have a look. Earlier, in the European session, the USD GPY pair reached the psychological level of 135. According to the 4-hour chart, the pair is trading within an uptrend channel formed since April 4. The trend remained bullish but could be showing signs of exhaustion due to the fact that on April 17, the Eagle indicator reached extremely overbought levels. The recovery in US Treasury yields and the US dollar's strength weakened the Japanese yen from the low of 129.63 reached on March 23. In the next few hours, we expect the yen to make a technical correction and reach the 200 EMA, located at 133.13. This level coincides with the bottom of the uptrend channel and could be a good point to take profits. On the other hand, in case of a pullback to the top, around 135.24, it will be seen as a signal to sell, with targets at 21 SMA, located at 134.30, and the 200 EMA, located at 133.13. The 7-8 mirror level represents a strong technical reversal. In case the USD GPY pair accelerates its upward movements and reaches 135.93, we could expect a rejection in this zone, which will be seen as opportunity to sell, with targets at 132.81, 5-8 mirror level. A daily close and sharp break below 5-8 mirror could revive the bearish cycle, and the instrument could fall towards the 4-8 mirror zone, located at 131.25, and ultimately could reach the psychological level of 130.00. Our trading plan for the next few hours is to sell the Japanese yen around the current levels of 134.82, reckoning a rejection around the top of the uptrend channel, located at 135.24, with targets at 134.30, 6-8 mirror level, and 200 EMA, 133.13. The eagle indicator is showing a negative signal which supports our bearish strategy. That's all for today. See you online soon. Good luck.